Hi there, Brad. So let's explain, first of all, what we're talking about when we talk about the carry trade. You've probably heard that phrase a lot more in the past few days as we've seen the big sell-off in risk assets, in U.S. equities, et cetera. So basically what it is people borrow money in a low interest rate currency, and then they borrow, and then they use that to buy assets where rates are higher, for example. So one of the classic places that we've been seeing that is people have been borrowing in Japanese yen and using it to buy assets elsewhere, including, by the way, Japanese equities, including in other areas from Mexico to here in the U.S. So sort of funding more speculative trades with this very low cost currency. So that's what we've been seeing happen. The unwind of it is when all of those big bets had to be reversed. So first of all, before we take a look at this, I do want to look at what we have seen from the Japanese yen, because the movement in the yen is really what spurred this unwind. Basically, this big decline, which is in the dollar versus the yen, came after the Bank of Japan last week raised rates there to 0.25%. So that seems very low, but we had seen the Bank of Japan holding at 0 to 0.1%, and even before the spring had negative interest rates. So this was a big shift coming from the Bank of Japan. That is what has spurred that big move, especially as it is in contrast now with the Federal Reserve, which is getting closer to cutting rates. So that sort of duality between the two is one of the things that has fueled the big move. So let's go back to that other chart that we were looking at. This is one of the ways to try to measure the size of the carry trade. And it's tough to do here because there's no sort of perfect way to do it. But this uses a Commodity Futures Trading Commission data here and looks at loans in yen. This is between banks, the purple line down here, and then non-bank financial institutions, things like hedge funds, for example. And obviously you can see the line has been going up and up and really spiking here, and that the share of the hedge funds and other speculators who have gotten into this market has been increasing. As of March, which is the latest that we have the data, 21% higher from 2021, $1 trillion is what this lending had been. So you see that sharp move in the yen that then leads to some of this unwinding, and the size here of it gives you an idea as to why it contributed so dramatically to some of the selling, at least, that we saw here in the U.S.
So is there